topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, good morning, and man, glad you're here. Mondays are sometimes a little bit hectic, but it's a great day to be doing the show here, Tax Talk for You, which, we do cover trucking, owner-operators, and stuff like that, but we also cover all business types. So when we are talking about any kind of business, a lot of it applies to other businesses as well. Like last week, we talked about repairs and maintenance to trucks, but business equipment. So it applies across the board to different businesses. Today, we got a lot of questions. We were doing a program with Ask the Experts, and we've had a lot of people asking us about setting up or what they should do when they're going into business for themselves. So maybe your first time going into business, you're trying to make a decision. What am I going to do entity-wise? Should I be sole proprietorship? Should I be an LLC? Should I be a C Corp? Should I be an S Corp? It gets confusing, and sometimes it gets expensive depending on, who you're talking to try to set up your business, when you're dealing in business, who's going to give you the advice that you want or need for your business. And, when you've got that, you've got to, really consider, who you're using, and then back it down to, what am I going to do in business? So, when you're choosing a business entity, it depends on your liability, your tax, and your growth needs. I mean, that's really what it comes down to. What kind of liability do you have going into the business you're entering? Now, if you're the only one in the business and the only one doing anything, if you have liability and you do something wrong, you're getting sued, whether you have an entity or not. Now, I'm not an attorney, never wanted to be an attorney, don't charge legal fees. So when we talk about liability, this is in generality, and this is coming from attorney friends that I do have that have given us advice and told us, hey, look, this is what happens when you are in business as a single sole proprietor, do it all yourself entity out there. We talk about sometimes in trucking, and people ask, well, I want an LLC for liability protection. Well, if you're driving the truck and you happen to get into an accident, you're the one that's going to be held responsible. So you want to make sure that, whatever you do, that, you're looking at what kind of protections, what is that entity going to offer? And in my opinion, an LLC is generally the best for small businesses. It does offer that personal liability protection, again, unless you make the mistake, and then is flexible, and it can be a pass-through company for taxation. So it gives you the flexibility out there as you grow, and then making decisions how you're going to use that entity. Sole proprietorships, they're the easiest to start. You go down and get a little DBA at your local tax office, or you just run underneath your name and you get your 1099 and you file Schedule C. So no protections, no liability protection, nothing else out there. Sometimes when I ask somebody and they say, hey, I want to be an LLC for liability protection, I said, what do you have? What do you own? Nothing. There's nothing really to protect yet. Now, if the business grows, hey, you do want to do that LLC. Now, you could choose to be a corporation. So Widgets Inc., Widgets Incorporated, whatever the name of the company may be that you so choose. There are one type of corporation, and it's a C Corp when you set it up. Now, C Corps will offer you, protection, even as a sole proprietor or sole owner out there. You're working for the business. You have to get a W-2, and then you file your own corporate tax return, and the corporation pays its own tax. Now, you can elect to be an S-Corp, and those are suited for those with net income $50,000 or above. Now, both LLCs and C Corps can make the election for S Corp, which then allow you to have pass-through income, but again, you've got to have W-2s. So we're going to talk about some common options in each of these entities and where this will actually go with for you when you're operating your businesses. So we got a lot of questions coming in. We'll get to those questions and we'll answer them in the future segments out here. We want to kind of lay out all the information about these corporations, and then we can come back and address particular questions that you would have for the different types of entities. Now, that LLC, these are very popular for small business because it protects your personal assets, homes, savings from business debts, and potentially lawsuits. You can actually go to your own Secretary of State's office and through their website and apply for your LLC. You don't need an attorney to do it. You prefer to have an attorney to get all the paperwork done that's right for your entity, but you can actually go to the Secretary of State's office and just pay the filing fees, and you don't need anybody else. But if you do want help with that, there are companies out there that have websites out there that can help you set up your entity and provide you basic LLC paperwork. And so then you have your entity, you have your operating agreement, articles of incorporation, the whole works is right there if you're using outside source, whether it's an attorney, whether it's one of the online services, or if you do it yourself, you can actually look up on the web, operating agreements for an LLC. Now, when you file through, let's say, Texas SOS Direct, which is Secretary of State's office, or you go to Mississippi's Secretary of State's office or Indiana, whatever state you're in, you will actually file the articles of incorporation, which you're going to want to make sure you have a copy of and you keep. So, that becomes your choice out there. Now, do you have to do it in your state? Well, if you're operating in your state, if you go out to, let's say, Nevada or New Hampshire and you file for an incorporation, but you're going to operate, let's say, in the state of Indiana or Illinois or Florida, whatever state it is, you are going to be considered a foreign corporation within the state, and you have to register within your state as well. So I suggest you talk to your attorney and make that decision. Now, if you don't want to be known or ownership or whatever in the business, well, then, hey, probably Nevada or someplace is a great place to, register your company. I've seen some other places and states that have advertised online that you could incorporate here, even though you don't live here. So, and generally, you've got to have a registered agent in that state of where you have your corporation. So you got to be aware of that as well. Your sole proprietorships, man, like I said, they're the easiest, they're the cheapest, default choice for one owner. There's no state filing requirement, but again, you're personally liable for all debts. Now, I'm going to tell you, when you first get started, I don't care what entity you have as a choice. Most places that are loaning you money are going to put it in your company name. And guess what? You get to sign a personal letter of guarantee as well. So you still end up being liable for those debts. But where these entities can come in and help you is on the tax side as well as the liability side. Now, your C corporation, your corporations, sometimes they can be very, very tricky and very, very difficult. And if you don't do it right, you will be stuck as a C Corp. Now, we're going to explain that after we take a quick break on what you need to do if you filed for a corporation. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
All right, so we're talking about how to set up or what entity you should choose for your business. And, we always recommend, hey, you should be talking to your tax advisor. You should be talking to your attorney and making a decision together jointly on what's right for you and your business. We can cover the tax strategies behind this. We can kind of cover, the different entities that are there. But again, talk to your tax advisor, find out what's exactly better for you tax-wise for your business and what you're planning. It's not just today, but it's looking out to the future and what the future holds for your business, or what are you planning for your business. So, you go to the Secretary of State's office and you decide you want to be a corporation and you want to be, Widgets Inc. And, you decide, hey, this is the name. So you get the name and you file for your
unknown caller.
Sorry about that. I thought I'd turn that baby off, but sometimes you forget. Sometimes you forget when you get into church, even though they remind you. So we forgot here at the show. Hopefully that never happens to anybody, right? But you get incorporated, and then you have to get your EIN number. And as a C Corp or as a corporation, when you get your employer identification number, it's going to tell you you're automatically a C Corp. Okay. Now, C Corps are good if you're considering and going to be in a high growth startup and you're intending to raise institutional capital or possibly go public, that C corporation provides the strongest liability protection, but it does have double taxation. Now, what's double taxation? Well, the company pays a tax and then they distribute in distributions to the owners of the business the net income or portion of retained earnings to the owners, and that gets taxed as well on the personal side. So you already pay tax at the corporate level, and then you turn around and make a distribution, just like ExxonMobil or one of the major companies out there that do dividends. You do a distribution of a dividend and you get taxed as well. So you have that double taxation out there. But again, if you are a high growth startup intending to raise capital or go public, you want to be the C Corp. Now, once you're a C Corp, because you established your corporation, Widgets Inc., you filed for your employer identification number, it came back and told you got to file an 1120, which makes you a C Corp, or you have to file the 2553 to elect S-Corp status. And S-Corp status is a designation to pass income through to personal returns, avoiding self-employment tax on a portion of earnings, but you have to have reasonable wages for owners working in the business. So you can't skip that step. But you can also elect S-Corp status as an LLC. So there is the option of an LLC being a pass-through company as well. Now, I know we're get confused and we get into the weeds. There's too many options. What is the right option for you? What I tell you is a lot of times you can start, unless you are actually going for high growth institutional capital and you want to go public, then you can simply default to an LLC. And then the LLC gives you options as you go. You could be considered a single member LLC for the first year and file Schedule C on your personal return. Depending on your net income, might be the right way to go. You can make the election right off to be an S Corp, or maybe you're married or you have other people that are members of the organization. Now you can be a multi-member LLC and you file a partnership return, which again passes income from the company to you, and it's taxed on you, the owner's level, not double taxed. Again, somebody working in a partnership, working in a multi-member LLC, or an LLC recognized as an S Corp, you've got to have some kind of reasonable wages. S Corp is through payroll. A multi-member LLC taxed as a partnership is done through what we call guaranteed payments. Whew, a lot of information, a lot of things going on. So I'm going to try to answer. We got a lot of questions coming in. The first question we got here this morning was from Lyle. Are all companies publicly traded? No, not all companies are publicly traded. Your LLC that you go out there and get, that is yours. You don't trade stock or partnership interests in your LLC or your corporation unless you make the choice to go public. And then, man, you got to have a team of attorneys and CPAs and stuff on your side that's going to walk you through registering your company to become publicly traded. That's a possibility out there. That's a choice, and looking at where you're going to go growth-wise and what you have out there to offer to people may make the biggest difference in the whole wide world on what you're going to do with the business. Pam asked, do companies move from LLC to corporations, and what are the changes? So Pam, once you're an LLC, you're a limited liability company. You're not moving from an LLC to an incorporated business. You already are incorporated just with the limited liability company. Now, what you do make the choice is whether you want to be an S-Corp, or sometimes we advise people that, hey, husband and wife can both be members, and now you've got a multi-member organization and you file a partnership return. So what the changes do become as your business grows is an election of how the business is going to be taxed. So when you first start up your LLC and you're a single member, you're going to be taxed on Schedule C, which means, hey, your net income is taxed 100% for Social Security and Medicare. Self-employment taxes, 15.3% across the board. Not a major issue if you make maybe $10,000 or $20,000. You're talking about, $1,500 to $3,000 in self-employment taxes that you're going to pay. Well, at that point, it doesn't really make sense to move to a S-Corp or a multi-member LLC. Your bottom line income is going to stay the same. Your taxes, yes, would potentially decrease, but then you've got to have reasonable pay for yourself if you're working in the business. And so mitigating factor out there is what the cost is going to be to get your tax return done. And if the cost to do your tax return doesn't save you enough money, then why do something like that? So you've got to really consider, what is my net income? What is my reasonable wage for working in the business? And take all those factors into account before you jump from one to the other. Now, if you're going to jump from an LLC, whether it's an S-Corp or partnership, and you want to go public, then yes, you're going to have to change your business structure to go from Widgets LLC to Widgets Inc. And so, you would have to make some changes out there. And then, of course, you're changing your tax status to a C Corp as well when you do that. So you're going to have to jump through the hoops to do that, but your attorneys are going to walk you through that so that, hey, you're going to find ways of making it work for your business and your entity as you're going. Man, a lot of information, a lot of great questions we got going on here. As we move through this, one of the goals of using a business is to, avoid taxation in some fashion. And sometimes choosing, that LLC, the S-Corp, sole proprietorships, those entities are going to avoid double taxation, to where the company is being taxed and you get taxed on your dividends. But you have to watch how those entities are being treated so that, not only are you avoiding double taxation, but now you're avoiding self-employment tax potentially, or reducing the amount of self-employment tax that you're going to have as well. So, there's strategic decisions to be made, not just for liability protection, but for tax purposes as well. Hey, we got some more questions from Victor and Cameron, and we're going to address those right after this quick break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing. But that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. I like this question we get. We're talking about business entities and what entity you should be choosing. Victor asked, in my opinion, how important is a company name? Sometimes company names are very important. It identifies what you do in business. It identifies the type of business that you're in. Sometimes it uses a family name and it's going to continue to grow. If you're in ranching, sometimes it's the family name in ranching that's out there, or using some kind of abbreviation about it. But a lot of times it's like the Sixes Ranch or Dutton Ranch, Yellowstone Ranch. Those things kind of made a name for them, but it was in ranch, so everybody understood what that was. Other times it's just around the name of the family or something of interest, and then you make it stand out. So when Ford came out with cars, he used his last name for the business, but he grew the business around it and making it a household name, and everybody understands, hey, Henry Ford, and he made Fords, and the cars. So, you can grow it around that. So it really depends on you. But a lot of times it's what you're doing marketing wise that's going to make that name for that business stand out. So there are certain industries where you can use something that will identify what you do. Other times you can take a name like Ford and build it into something that's mammoth out there, into a large C corporation that lasts forever and ever, passes from generation to generation, and has multiple hundreds, thousands. I don't know how many people own Ford stock, but you can see that it's kind of up to you and how you're going to build it and grow from there. So Cameron asks, do you need to file in the state of where your business is running in? So most states do require you to do some kind of filing within your state. So I know, like in Texas and Florida, and I believe Louisiana, if you formed your corporation in a different state, you've got to register in the state you're operating in as well as a foreign corporation. So yes, you end up having to register within the state that you're going to operate in, even if you formed in, let's say, Nevada or someplace out there. And I know there's Delaware, and a lot of corporations are filing other places, and especially if you're going to be a C corp, maybe it doesn't really matter, where you're at and where you form it. Sometimes they'll give you, better way of doing things, and sometimes it's talking to your corporate attorney to make sure that you're going to choose and do things right. Cameron also asked, do you have to file different taxes with the IRS to run in different states, or just one federal tax return? So your corporation, once you form it, you take your articles of incorporation and you file a form called SS4 with the IRS. SS4 gives you one singular employer identification number with the federal government to file your taxes, and you file one corporate tax return with the federal government. Now, depending on what state you live in, or the different states you're running in, you may have to file a corporate tax return at the same time you file your federal for each and every state you're operating in. So if you are a conglomerate running across all the different states, and you have a nexus, place of business in that state, then you're going to be required to file a tax return in that state for the business the entity does in that state. So you've got to have good bookkeeping, not only for the total entity, but you want to make sure you can break down what business you did in each state you're operating in, because you're going to have to file those tax returns in those states. Now, depending on the state will depend on the taxes that you will pay there, but you want to make sure that you're getting everything broken down, income and expenses by state. Now, I tell people, we really want you to be tracking by location. So if you have multiple locations in the state, so let's say you're in Louisiana and you've got a location in Baton Rouge, maybe you've got one in Shreveport, maybe you've got one down in New Orleans or out in Hammond. So each one of those locations that you want to make sure that you have your income by location and expenses broken out by location. Now you may even be able to allocate some overhead between all those locations from the corporation itself running general and administrative expenses to oversee that. So, you want to really break it down so and part of the reason you also want to do that is because you want to know how each location's doing. If you're failing in New Orleans and it's just bleeding you dry, well, maybe you want to close that location and concentrate on Shreveport or Hammond that is being a huge profit center for you. You don't want that to, one location to be a drain just because it's underperforming. So you might want to reconsider where you're operating at, and move from one city and maybe move it to a different city or do something different. Maybe your marketing is failing in that area, and you want to be able to identify what the problems are to be able to operate successfully in each location that's out there. James asked, does an LLC need a board of directors or a consultant team? No, not necessarily. If you are, operating with, multi-members and stuff, yeah, you might want to put a team together that would be your board of directors. But most of the time, you are the owner, you're the managing member. You don't need to have that full board of directors out there. You can appoint yourself as president and secretary. You don't need anybody else. If you're married, it could be your wife sitting in one of those positions. And then you can have board of directors meetings somewhere with your wife or significant other and, ride off that trip as long as it's business. And so it gives you advantages out there as well. Gene asks, what does one need to develop an LLC? A company name and the filing fee with your state. So if you go to your Secretary of State's office, find out what their filing fee is, that's really all you really need. At that point, you can go in and file as long as you have your company name and nobody else is using it. And generally what I tell people is to try to come up with 3 or 4. Do some research. Look at the entities on the Secretary of State's office. Do some background search. If you're looking to become a C Corp and you're looking to become public, go look at patents and trademarks and stuff and see what company names are out there as well nationwide. so that, you have the right structure in place, for your business, but you also have the right company name to, ensure you don't have to change it later and you can continue to have success. And you don't want to copy somebody else's name because you don't want trademark infringements or anything else on you out there. So company name becomes important. Kevin asks, what is the difference between public and private companies? And how do you know what your company should be? Well, Kevin, this is kind of a personal choice. Difference between private and public. Private is something you own, or maybe your family owns, or maybe you and a couple of partners decide to go into business together. That's not public. Public's when you're going out and trying to get investor money into your business, which requires a whole bunch of individuals or other investors out there to buy stock of your business. Now you are going to become a public entity and you've got to file with the SEC and you're going to need a team of attorneys. So if you are looking to do something like that, get an attorney, find out what he's going to charge you, and make sure that you're covering your costs by getting these investors and having an attorney working for you. And how do you know? It depends on your plans. This is where consultants come in and to sit down and talk to you. If you're going into a business that's going to be very intensive, expense-wise to get going and get started up, and you're going to be pulling investors in, but it has a huge upside. Now you're maybe looking at that C Corp level because you're going to be trying to get the public involved in your business. So let's say you're creating AI software and you need to bring in investors and you have these grandiose plans for the future that this is going to help you greatly succeed, and you need to be a public company because you see the potential out there of being millions, billions, quadrillions of dollars coming in, and you can entice people by potential future profits. You're not guaranteeing anybody profits, you're just showing potential, future profits out there. And, C Corps will provide investor accessibility and stuff. So you can go from there. If you're going to be an S Corp, you're actually limited on the number and type of shareholders you have. LLCs and partnerships may also face challenges in raising capital as well. So C Corps are generally used for that. Hey, we've got several more questions. We're going to keep addressing those questions and questions that we got from Ask the Experts that came in. That Steve-O with Ask the Experts forwarded over to me. Hey, real quick, if you're in IRS trouble, you owe the IRS money, give Taxation Solutions a call. See, that was important of a name. Taxation Solutions Tax Relief. Getting you tax relief to save you from the IRS. And so that's a great name for tax solutions. Getting Taxation Solutions out to you to save you from the IRS. Give them a call at 888-930-1016, 888-930-1016, and don't forget to mention that you heard it here at Tax Talk for you. Hey, we're going to take a short break, and we'll be right back after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for you with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. And, throwing the producers off by continuing talking when we're supposed to go to a break. And hey, at least they didn't overrun me. We have a little bit of fun here and on the show and trying to help you, with your taxes. And, today was a great show about business entities. I can tell you the questions have been incredible, and it really helps us be able to better help you. So, if you got questions during any of these shows, hey, we always love you asking. Harry asked, what's the difference between an LLC and partnership in taxes and credit? So if you choose to be a general partnership, just you and the guy next door become partners starting, say, a lawn business or something out there. You're going to file a partnership return. You have no liability protection whatsoever. So if you have lawn maintenance guys out there and they do something wrong, you as a partner and the other guy can both be sued personally. If you have that LLC out there, it should limit your liabilities out there. Now, in tax-wise, there's not going to be much, because if there's two members, you're a multi-member LLC taxed as a partnership, or you are a partnership taxed as a partnership. So you're going to file that partnership return either way, regardless. But if you're going into business as a partnership, I would still suggest you go in as an LLC, and therefore it's a multi-member partnership out there, and it gets taxed as a partnership. So that works for you as well. Lyle asked, does a private LLC have private stock? You're considered to be a member. You're not necessarily issuing stocks or stock certificates. Same thing when you do a corporation. You are supposed to issue stocks and stock certificates, but it's just you holding the stock, or you and your partner out there doing that. So you want to make sure that you follow the rules that you have for your business, get that operating agreement. I always tell people, if you're going to form a corporation, make sure you get with an attorney to do it. But you can also do it on your own. Just going to have to do a little bit of research, what else you need in your corporate book. And there's some places that also sell corporate books for you, so you can actually do it your own. James asked, if an LLC will be in a trust, does the trust have a tax ID number, or does every entity in the trust have its own tax ID number? So depending on your trust may or may not have its own tax ID number. So if it's a living trust, it may be solely under your Social Security number until that trust becomes active after you pass away. Then it will go out and either pass into a new trust, depending on the rules that are set up and everything. So depending on what you've got. If you have an irrevocable trust, then that trust will have its own tax ID number and have ownership in your LLC. And depending on how the membership of the LLC is, so maybe you're a member and the trust is a member, then therefore each would receive a K-1, and then the trust would file its own tax return and you would file your tax return. There are a lot of variables in trusts and how the trust is set up. If it's a trust that is irrevocable, then it's going to file its own return. If it's a revocable trust, then it may default to your Social Security number, or default to you as the owner that's out there. So we would have to look at the trust documents to determine exactly everything that needed to go in to the trust. But if your trust is owning multiple entities, each entity would still have its own social employer identification number. James followed that up with, would you form the trust first or the company? I would be forming the trust first. However, maybe many people have companies that are already running and they want to roll those entities into the trust. You work with your trust attorney to make sure that they're doing everything correctly so that you're getting the right benefit. Had a message through Ask the Experts. Candace asked, do LLCs file as S corporations? They can. They don't at the beginning unless you make that election through Form 2553, and there are reasons to do it and there are reasons not to do it. That's something that we can address maybe in one of the next shows. The benefits and reasons to do an S corp and those reasons not to do an S corp. Owen asks, are there differences in the type of companies to start and what would be best for a solo venture? I always say, hey, if you're doing a solo venture and you're not planning on going public, form an LLC. It's inexpensive at the state level to be able to do it. Most states aren't charging an arm and a leg. Only the attorneys actually filing the paperwork do. But if it's something you can go to the Secretary of State's office and file, then it's a good way to do it. You may need more paperwork later, which you can do as you're making money. And Parker had asked, if you're running a side hustle, should you have a business and what type of taxes would you file? A side hustle, don't necessarily have to unless you're seeing future growth. And if you're seeing a future growth that's going to be exponential, then you want that LLC, and it's going to file initially as a sole proprietorship on Schedule C. And if taxes are minimal, if you're not making much income, but if you grow the business, then you can elect to be that S corp, down the road. Kirk asked, what is the difference between filing on your own taxes versus business? Hey, we always put this in the most eloquent language, and that is it takes the tax trash off your personal return and puts it on a business. So if you get audited personally, all they're looking at is the K-1 coming from the business. They're not looking at all the trash in the business itself. So they're not looking at your financial reports and everything for the business. They're not getting into your business income and expenses. All they're seeing is a K-1 coming over. Now, if you commingle things, meaning you're not running a separate bank account for business and just business, then, hey, everything's fair game when the IRS audits you. Everything's fair game if you get sued. Don't commingle. Set up a separate account for the business and run only business through the business. Candace also asked, would it be better to have a company as an LLC or a corp as a startup? Again, as we've talked about, it just really depends on where you see the business going. Are you trying to go public and bring in a whole bunch of investors in the business? That is where the choice becomes for you. And one last quick answer here. Sally, do you file LLC and personal taxes? When you first set up that LLC, if you're the only member, you file on your personal return as a Schedule C. If you make a choice to be a multi-member or an S corp, then you file the S corp return, and the K-1 comes to your personal. Hey, time flies when we're having fun. We're down to the last minutes here. Man, thank you for the questions today. We always appreciate it. Make sure you're here Mondays at 10 a.m. Eastern Time, right here on Tax Talk for You on W4CY Radio. Hey, follow us over on Facebook or go to taxtalk4u.com and follow us there. But whatever you do, be here every Monday, 10 a.m. Eastern Time. We're here to talk about your taxes, your business. Hey, today was great. We talked about starting your own business and answering people's questions. Be here every Monday. Ask those questions. Let's get the answers out. Let's help you save money on taxes. The last thing you or I or anybody wants to do is pay more in taxes. Hey, have a God-blessed and glorious week. We'll see you back here Monday at at 10 a.m. Eastern Time on W4CY Radio. Have a great week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.